Hey everyone, at $1,208 per share before the stock split, Nvidia's stock price has absolutely exploded from all-time lows. Now, some investors might be feeling like it's too late to buy Nvidia stock. It's gone up too much, too fast. There's too much hype. There's too much enthusiasm. I missed out. For those of you that feel that way, I've got two spectacular AI stocks you could buy instead. Now, I will say that I don't think it's too late to buy Nvidia stock. I still have Nvidia stock rated as one of my top stocks to buy. I've had Nvidia stock rated as my top stocks to buy on my top stocks to buy list all year long, and I've kept it there because the company has delivered revenue, profit, and cash flow to support the stock price growth. It hasn't been on all hype. It's not a meme stock. It's not just going up for no reason. So for those reasons, I still like Nvidia stock. But understandably, if you feel like it's too late, I've got two others that I think make an excellent buy. Let me share those with you right now.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
The first one I'm going to recommend is Taiwan Semiconductor Manufacturing stock. This is trading at a forward price to earnings of 20.81, which I think is a relatively cheap valuation for this spectacular AI stock. If you're not already aware, Taiwan Semiconductor is a primary supplier to Nvidia. So if Nvidia is thriving, it's very likely that Taiwan Semiconductor will be thriving. But Taiwan Semi doesn't only supply Nvidia, it also supplies AMD and others. So it's more diversified in terms of the growth of artificial intelligence. If someone surpasses Nvidia, and if that someone happens to be AMD or maybe another company, Taiwan Semiconductor is likely to benefit from that as well. So the company doesn't only rely on Nvidia, although Nvidia is one of its larger customers. So Taiwan Semiconductor trading at a relatively cheap valuation according to its prospects. Let me share with you how its revenue and its operating income have grown over the last decade. Revenue has exploded from 20 billion in a trailing 12-month period in 2015 all the way up to 71.46 billion in the most recent trailing 12-month period. Operating profit as well has exploded from a little less than 10 billion in 2015 all the way up to 29.89 billion in the most recent trailing 12-month period. So revenue and profits have more than tripled in the last decade. That's great news if you're an investor that supports stock price increasing. Now, one of the bigger risks with Taiwan Semiconductor is the geopolitical risk. There's a lot of concern about China's intentions with Taiwan. And if that risk comes to fruition, the valuation of Taiwan Semiconductor will likely fall dramatically. Taiwan Semiconductor is trying to diversify its manufacturing base outside of Taiwan, but that progress will be slow. Although it is progressing, right? It's got new facilities coming online in Japan and in Arizona. And so it will slowly begin to diversify away from Taiwan. And that will help remove some of those risks, although it will be incredibly difficult for the company to remove all of those risks. So one of the reasons why Taiwan Semiconductor is trading at a relatively cheap valuation, given its profit and revenue and its position in AI development, is because of those risks. Those risks are accounted for in its valuation. So you're already paying a lower price because of those risks. Still, it's important to be aware of those risks when considering Taiwan Semi stock. The next AI stock you can buy if you feel like you missed out on Nvidia is Alphabet. The home for Google and YouTube is trading at a forward price to earnings of 20.57, a similar valuation to Taiwan Semiconductor. And just like Taiwan Semiconductor, Alphabet has done a great job growing its revenue and profit over the last decade. Revenue exploded from around 75 billion in 2015 all the way up to 318 billion in the most recent trailing 12-month period. Operating income jumped from less than 25 billion all the way up to 92 billion in the most recent trailing 12-month period, both of which exploding very nicely for investors. Now, Alphabet operates in the trillion-dollar advertising industry that's continuously growing over the decades. Now, this industry will fluctuate. It's more sensitive to the macroeconomic cycle. When the economy worldwide is growing, advertising will grow. If there's a recession worldwide, advertising spending will decrease. So it's closely correlated with economic growth. Still, over the longer term, economic growth will be positive and advertising spending will continue to increase with periods of volatility in between. Alphabet is the most dominant advertising company in the world. Google Search and YouTube generate hundreds of billions of revenue, as you see here, 318 billion in the most recent trailing 12-month period. What impresses me a lot about Alphabet is its ability to generate over $300 billion in revenue while offering mostly free services. Most of its business revenue is generated from free services that are ad supported. Things like YouTube and Google Search and Google Suite and Gmail and things like that. All free, yet Alphabet manages to generate strong revenue and strong profitability. That takes skill. That takes a lot of business development, matching consumer taste with what you have to offer at a large enough scale where it attracts advertisers to your platforms because you have so many people using your products. Over 2 billion people use YouTube on a monthly basis. And so that attracts marketers that want to reach individuals that are watching YouTube. And Alphabet dominates that market. Now, one of the bigger risks with Alphabet right now is how large language models could take some of its market share from Google Search. Google Search has an over 80% search engine market share worldwide, and there's a risk that it will lose some of that to ChatGPT and other large language models that may offer better results instead of going to Google and searching for what you're looking for. Now, so far, I haven't seen evidence of that hurting Alphabet's business. I've seen some incremental loss in market share, but Google has its own large language model. It has its own AI model, and it's been able to withstand some of these challenges so far. That doesn't mean that risk is eliminated. It just means that so far it's been able to push it back. So that is on my mind, and that is something that investors should be aware of with Alphabet. But so far, Alphabet has been able to withstand that challenge. And I'm reasonably confident that Alphabet will continue pushing back that challenge, even though it might lose some incremental market share on the edges. I think longer term, it'll be able to withhold most of its market share in search results. So if you feel like you missed out on NVIDIA, Taiwan Semi, and Alphabet are two excellent artificial intelligence stocks that I think you can add to your portfolios instead. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.